Hello, everybody. Welcome back to yet another podcast episode at MH Consultants. And today we have a very interesting topic for a lot of you who may be confused about what to do in order to earn a passive income or how to wisely invest the savings that you have. So, Ron over here is quite an expert in the field of investing and he teaches some subjects around it as well in college. So, I myself take a lot of advice from Ron around investing and investments, and here he is going to share his wisdom around investment 101.
Yes, Investment 101. I think you give me a little bit too much credit about the investing ability. I know about the theory a lot more than I know the practice.
Or you practice
I
yourself.
practice as well, as do
Yes.
you, as you will find out during this podcast. But I do teach it, so it's more theory than practice. But I hope that this will be the beginning of a series that we do on investments.
And I believe that one of your our followers
Correct.
um, reached out and said that they wanted a podcast especially on investment. So we thought that it must
More
be.
specific than that, our subscriber requested an investment about how can salaried people invest safely.
Yes.
So that's what we're going to look at today. And I
Yeah.
said, if this is popular, we can look at some other areas as well, and maybe even bring in some guest traders.
Yeah, that'll be interesting.
Yes, yes,
But you
So-
trade yourself, right?
I do, but not millions.
But you
Not
do
yet,
trade, and you
millions.
are successful in whatever trading you do.
Oh, please, let's not talk about me.
Okay, fine.
But the more important subject is what's for breakfast, Anita.
Oh, yes. So today's breakfast is from Karibu, and we have sandwiches. You keep asking me why we keep ordering sandwiches. Well,
Yes.
because on a podcast, we want fuss free food. We don't want food that's dripping and dropping. And then we have our regular coffees and tea. Uh, and this breakfast is sponsored by our very favorite app, UApp, and
Yes.
it's so easy to order on UApp, and they're so prompt with their orders, and I'm really really happy with their service. Thank you, UApp, for sponsoring the podcast and the
Thank
breakfast.
you are.
So, shall we get on with the podcast?
Yes, I think it's best to say at the beginning we are not professional stock pickers,
Hmm.
and any advice that we give is our own.
Yes, from our experience.
Right. So take our advice or not. It's entirely up to you. Okay, so this, I think he's a dentist actually, the subscriber who asked how can salaried people invest
Right.
safely. There's a very easy answer, a very quick answer to that one.
Hmm.
It would be to buy US government bonds.
Okay.
Yeah, they are the safest investment in the world, as they are guaranteed by the US government.
Hmm.
The annual interest on a 10-year US government bond is currently 2.9%.
Okay.
It might be a little bit more now because yesterday interest rates went up. So for every $100 you invest, you receive all of $2.90 per year.
That's
Yes,
very
but the
low.
subscriber asked
Okay.
the safe way of doing it.
Yes, the safest. Yeah.
Now, you snarled a bit there that you don't think $2.90 is enough.
No, it's not.
So then you need to take on a little bit more risk.
Okay.
So I think the subscriber actually means how can he or she invest safely, get a reasonable return for a reasonable risk.
Hmm.
I told you there, an investment that carries almost no risk.
Yeah,
If you want more, you have to risk more.
that is true.
As simple as that. So let's look at what kind of investments are available
Okay.
first. Well, stocks. When you buy a stock, you have a share in a company,
Yes.
a very small share. Do you have any shares, Anita?
Not at the moment.
None at the moment. What about in your pension plan?
Nothing yet.
Nothing yet, okay. So you receive a return either through receiving a dividend, which is income, or and hopefully, an increase in the value of your shares.
Yeah.
The general rule is that stocks give a higher return than inflation over the medium to longer term. At the moment, that sentence does not apply because we know that inflation is high
Yes.
and stocks have generally been falling for the last 9 months. So many of them have returned negatively in this year. But I did say over the medium to long term, which is 5 years onwards. Onwards. So
Okay.
if you keep your stocks that long, then don't look at them every day because you're going to be worried that they might be going down.
Right.
That, of course, brings up another question. What's your time horizon? How long are you going to invest for? You ask me, do I invest? I have a popular app called eToro, which is a trading app, and I day trade stocks. So I'm in and out in the same day.
Sounds intense.
Sounds intense. It's a bit like a game. Really doesn't matter what inflation is or anything. Just get the right direction, buy or sell, sell or buy. That's not really investing, it's speculating.
Yes.
So returns are usually higher the longer you hold the stocks. What's the best method for investing in stocks? How did you invest? Just go like this? Look at the financial media, do some calculations, get somebody else to do it for you.
Read the newspapers. Ask people
the
who
newspapers,
Yes.
the papers or
Yes.
the media.
Yes,
That
basically.
shows how old you are, reading newspapers.
So read newspapers. Ask people who are really good at it as to some advice on what's going to pick up, what is the best stock to invest in at the moment, what kind of portfolio should you have.
Did you pay for advice?
No, just friends.
Just friends
who are good at it.
Okay, so there are many popular ways of investing in stocks and what stocks to invest in. And maybe we could talk about those next time or if this becomes popular.
Yes.
But for today, we're just sharing advice.
Yes.
And at the end of this podcast, so please stick around, I'm going to share the advice of probably the world's most famous stock picker. Now, who is that? Don't answer it. Just stay around, please, until the end of the podcast and listen to his advice. Okay, so that's stocks. Then you have bonds, government bonds. In UK, we call them gilts. I don't know what you call them in India. So you've never had any? No? So these bonds, not just governments, companies also issue bonds.
Okay.
They are loans to the entities. So you're loaning money to the government, which will be paid back, and to companies.
Okay.
The return you receive will depend upon the credit worthiness of the borrower. So governments or big governments are unlikely to go bust, so you get a low return, which is usually lower than inflation. So you're actually losing overall. Some companies pay a high return for what we call junk bonds. They are bonds where the risk is high that the company may not repay or may even go out of business. So your risk is high, and in a reward for that risk is a higher return or payment on the bond.
Okay.
If you get your money back, if the company stays in business.
Okay.
So that's less risky than stocks, but your returns are generally lower.
Okay.
Then, of course, you can keep your cash under the mattress.
Easiest way
Do
to
you
do
do
it.
that?
No,
You got any
not
cash
under
under
the
your
mattress. No.
No. You keep it in a bank?
Yes.
Huh? You keep
Yes.
money in a bank. That's okay. You're not likely to lose that money.
Yeah.
In fact, during difficult times, governments have tended to guarantee deposits in banks so that confidence is not lost. The problem there is you'll get even less return than you
Yeah.
would do in a bond.
Yes.
So you've got your money, but it's gaining less than inflation. So overall, you're actually losing.
Money. Yeah.
But it's there available to you should any opportunity come up, or you have a rainy day where you need money straight away.
Hmm.
But that is an option, right?
Yes.
That is an option.
But the fundamental to all this investing is the fact that you should have some savings plan, isn't it?
A plan. Okay, well, you're just taking me off track a little bit now.
As usual.
From what I read, what age do you think is the best to start your retirement planning?
As soon as you start working.
20-ish.
Yes. Yes.
Did you?
25.
You did your retirement planning from 25.
In a way, yes, because I bought a property.
How's the retirement planning going now?
Not
20
very well.
years later.
Because I relocated so many times.
Okay.
Doesn't even make sense.
Anyway, we'll come to 3 different ages of people and what kind of investments they would be looking at. We then have commodities. Now, the ones that we most understand that are purchased for investment are gold and silver.
Yes.
Gold and silver are also bought for jewellery purposes.
Yes.
Yes. Gold at the moment is not doing very well, even though it's supposed to be a hedge against inflation. Commodities also include grains, energy, like oil,
Coffee, tea.
so-called softs, such as coffee and orange juice and others. The prices of these commodities fluctuate depending on supply and demand. They're obviously physical assets, but it's difficult for an individual to actually buy the commodity of 1,000 barrels of oil, for example. I'll talk about the futures market in a second. Or, I don't know, 500 litres of orange juice. So the main commodity there that's purchased are gold and silver.
Okay.
But I won't stay long on commodities. Then there's property. Do you own any property?
Used to.
You do used to. Right. Well, maybe I'm a little biased because I've always done better with property than I have with stocks. I'm not saying by that stocks are any worse or better than property. It's just me. Property returns come from rent paid by tenants and increases in the value of the property
itself, yes.
However, when you own property, you're usually spending quite a lot to keep it up and repairs and renewals.
Also, the buying of the property and selling of it is a cumbersome process.
And you generally need quite a high deposit to start with.
Yes.
But you can get, if you get a mortgage, you're basically leveraged.
Yes.
Or as we British say, leveraged.
Leveraged.
Which we could talk about again in a future podcast. Several advantages and disadvantages between property and stocks. Again, I'm going to say we could do another podcast on that. I hope we get some answers here, Anita, saying please, please, please do another podcast on this in a bit more detail.
You're enjoying this so much.
Yeah. Now, I did look at which is better. So from March 1992 to March this year, the US average growth rate for property was 5.3% a year.
A year?
Yes. No, yeah, not for the whole 10, 20 years. 30 years. The S&P returned an annualized 9.65% per year. So that's quite a big win there for the S&P, which is a stock for stocks. However, didn't take into account rents or dividends.
Okay.
So the general idea that over a long period, like 30 years, stocks outperform properties. But again, it depends which country you're in, which stocks you buy, where you buy your property. But in a podcast as short as this, I can only give a general example. Then there's another one, Futures. I used to trade futures. I'll read what a future is and then go into a little bit more detail. This is a legal agreement to buy or sell a particular commodity or asset or security at a predetermined price at a specified time in the future, hence future. As an investor or a speculator, you don't actually ever take delivery of anything. You're just buying the right to something.
Yeah.
You can get up to 20 times leverage. So you can put a very small amount down to start with. And if it goes the right way, you can make good money.
Yeah.
If it goes the wrong way, you could be in trouble. And that's where you need to use what we call a stop loss.
Yes.
Another beautiful podcast that would be.
Stop loss.
If anybody wants to know about futures, please let us know. Unfortunately, in futures, the figures say that almost 60% of accounts lose money.
Oh.
It's a very specialized area.
So this is day trading.
Very,
right?
very quick on it.
So this is a form of day trading.
Yes.
Okay.
Although you can trade futures longer than days, but it's not really a passive investment like stocks can be.
So you don't buy a commodity and let it be there for a long period of time?
Not futures, no, because there are delivery dates. So if you leave it for a long period of time, you could find yourself taking delivery of 1,000 barrels of oil.
Oh my God. Okay.
Right? And the amounts involved, because you've got high leverage, means you could lose a huge amount of money.
So in the morning you buy, in the evening you sell.
It could. Well, you get me into futures now, because if I say to you, you could sell before you buy, that's going to be another question, isn't it? Which I'm not really ready to answer in this
Not
podcast.
getting into it, but it's interesting.
Yeah, very interesting. So, but remember, our subscriber asked for a safe method of investing, so I wouldn't recommend this
Futures
for our subscriber who just seems to want to be able to work and put a certain amount away every month and see it grow.
Yeah.
Okay, and then probably the one that you like most of all, which is a newbie on the block, cryptocurrency.
I don't think I like it, but I'm intrigued.
You're greedy because you saw that people were making money last year and you wanted to get into it.
Yes.
And last year a Bitcoin would have cost up to $60,000. Now it's down to 18,000. So you wouldn't have made any money there.
Yeah, thank God I didn't invest.
Well, I don't know. Is it the right time to buy?
I really don't understand it too
Well,
well.
I don't understand it either.
I don't know how it works. I don't know what value it produces at all.
Right. I know you don't drive a car, but if you drove a car, you'd know how to drive the car without knowing how the engine works. Correct?
Yes, but at least I have the car. I can see it.
Well, that's the problem with cryptocurrency.
You can't see anything. You don't know what's happening.
It has no intrinsic value.
Exactly.
Because it's not guaranteed by a government, the same as currency is.
Yes, and it doesn't produce anything, the buying and selling of it.
So lucky that I advise you not to buy it then, isn't it?
Yes, quite lucky. Thank you.
Well, I believe that we're going to have a future podcast about somebody that knows much more about crypto than I do.
Yes, we're trying to bring someone in.
Yeah, so I'm sure that person will be totally in favor of it as being the future.
And that's an interesting perspective to have.
Absolutely. And I'm going to be very interested in that.
Yes.
Yes, anyway. So what have I gone through there? Stocks, bonds, cash, commodities,
Yes.
property, futures, crypto. That's quite a lot, isn't it?
Yes.
Now, you don't have a choice of just one of them. You could put them into a portfolio, a grouping. And of course, I teach portfolio management also to my students. So we could talk about that in a future podcast, but it gets a bit mathy, that. bit too much maths. Suffice to say that you invested something that might have high risk and it's offset with low risk. Yeah. So let's look at how old you are and at what stage in life you are. Because I don't know the age of our subscriber that asked for this.
I think we have a wide range of subscribers.
Yes.
There are people in their 20s, 30s, 40s.
Here we go then. So do you remember when you were in your early 20s?
Yes, I remember.
Not long ago, is it?
No, it was 20 years back.
And did you think this is a good time to start retirement planning?
I didn't think of it like that at all, actually. It was more like checking things off my checklist, like buying a property.
Right.
And putting savings aside to invest in something else in the future.
Okay. Has that worked?
But not really.
Okay. So in your 20s, you've still got 40 years to get it wrong.
And I
know,
did.
you can have a big loss in your portfolio early on, and you've still got time to make it up.
Yes.
Yeah. So experts recommend a split of 80% stocks. Didn't say what kind of stocks. 20% bonds. So you go for capital growth rather than bonds that give you income.
Okay.
At the same time, of course, you're starting to buy a property, aren't you?
Yes.
So there are a lot of demands on your money.
Yes.
So try and put something away every month.
What percentage of your salary should you put away?
I can't give a percentage on that.
So there's no such.
Afford?
There's no such
maybe
golden
you can't afford
rule.
Anything.
Maybe you can't afford anything.
Maybe at least 10%. I would think, probably 20%.
Every month.
That would help. Okay, 20 years later, and here's Anita, and you've reached your midlife crisis.
Not crisis.
Are you thinking of retirement?
No, I can't.
It's not far away. 20 years to go. That's 2042.
Yes, seems very bleak.
Is that bleak?
No, but I have not thought of retiring at all because I don't know if I can.
Okay, so the recommendation is to be more conservative.
Yes.
As you get older, replace your stocks and move more into bonds. So the more you're in bonds, the more conservative it is because you're not, or at least government bonds, you're not taking on as much risk.
Okay.
So we're looking at their 60% stocks, 40% bonds. Still 20 years. It's quite a long time to recover from any losses. Maybe you could do it twice in those 20 years. You know, when you were 20, you got 4 or 5 times when you could recover. So it's not, you're not problem yet. And also in your 40s, you've still got the mortgage, maybe got kids. Lots of demands on that money that you're making.
Yeah.
Yeah. And then 20 years later, you get to me, and it says here almost time to retire. Should be almost completely in income. Can't afford to take the risk of my stocks falling or my portfolio falling. I need income. So that would be bonds and quality stocks. Like, I'm not saying which ones, which pay continual dividends, but can't take risks, can't afford to lose money at my age. Huh? So at an earlier age, invest in growth stocks. Now, these are like Meta, Uber, that kind of thing that don't pay many dividends. Cash flow is always in the future, but they increase their capital value. And then as you get older, you want income. So that's all I want to say about the types today. We're coming to an end of this today, but I'm quite happy if our listeners wish us to go into a bit more deeper in some areas. It might help you with your retirement planning as well.
So I had one question. Can a salaried person also look at investing in businesses? What do you think about that?
Is that safe? Remember, this is safe. Of course they can, yes.
And
yes.
what about things like art?
Oh, you're going to start going down the NFT route and all this.
Not
and
NFT,
art and-
particularly art.
Okay, let's look at art. But again, is there an intrinsic value there? Do you
Well-
know how much that's going to be worth at an auction?
No, but I think there are galleries and auction houses that are now giving that option of investments to a lot of people who have high incomes.
So
and
we'll
they're
talk
salaried.
about that next time,
Sure.
right?
But
Because that's
that
not
is
very
a-
mainstream. At
That's
the
not
moment,
mainstream.
is it?
No.
I'm kind of thinking our subscriber wanted us to remain mainstream.
Yes.
Right. Now, remember, I promised you something, didn't I?
Yes.
Do you remember that? Because it was like 10 minutes ago.
Yes.
From this professional stock investor. Now, we all want to beat the market, don't we? Why are we buying stocks and investments? Because we're greedy, isn't it?
Yes.
Even you would say that.
Yes.
You're not doing it for environmental, social, or governance reasons, are you?
Pure selfish.
Although you could have a portfolio that's designed around those areas.
Does anybody do that?
Yes, indeed they do.
Okay.
On the basis that they think that because those companies are involved in that, they get higher returns, I get higher dividends, higher capital
Like that. They're
appreciation.
qualitative
all comes
parameters. Yeah.
back to greed in the end.
Yes.
We all want to beat the market, to buy stocks or investments that have higher average returns with lower average risk,
Right.
right? And a whole industry of investment professionals is available telling you they can do that.
Mm-hmm.
And they will quite happily take their fees, and whether your stocks or investments go up or down, they'll still get their commission. Now, the professional stock investor that I'm taking the advice from is obviously Warren Buffett.
Mm-hmm.
Have you heard of him?
Yes.
Is there anybody who hasn't heard of him?
Everybody said.
Right. So he said investing is actually a very simple game,
Mm-hmm.
but that financial advisors have convinced the public
It's
that it's
complicated.
harder than it actually is.
It feels complex in the head.
Yeah, well, it's made complex so that you pay them a lot of money.
And I think as we grow older, we feel more and more paralyzed by the fear of risk.
So what's his advice? To put your money into low-cost index funds, which hold every stock in an index, part of every stock. So the S&P 500 is a stock index.
Yes.
You can buy that index, and that index is weighted for all of the 500 stocks.
Okay.
Yeah. So over time, these low-cost index funds have always consistently done better than professionally managed funds, both during bull markets, where the market's going up, and bear markets, when it's going down.
So
You
he's indicating that you can do this yourself. You really don't need a financial advisor.
Well, he said low-cost index funds.
So they are
So
low risk.
by saying that, he's obviously paying somebody, but it's low cost.
Ah.
You find that a lot of professionally managed funds that just invest in certain sectors of the market
Yes,
are quite expensive.
they are. Yeah.
He says, put your money away every month,
Hmm.
10, 20% of your salary in a low-cost index fund. Just leave it, and that will work for you.
So long to medium term,
Yeah,
5 years
yes,
and above.
Yes, absolutely.
Okay.
Yeah. So I think, have we answered the subscriber's question about
Yes.
how to invest safely? In
Yes.
fact, Warren has answered it for him, hasn't he?
Yes.
I mean, we have given several pointers where we could and would be happy to do several more podcasts looking in specific areas in more detail.
Yeah.
And I hope some listeners will ask for that because it is interesting.
Yes.
And that's it from me now. I think I've answered the subscriber. And if any other subscribers have any other subjects that he or she would like us to have a go at, we'd be very happy to. So what was for breakfast?
We had karibu,
Right, we did. How was
but
it?
we haven't tried it.
No, because we were so excited about what we're talking about, huh?
It's your favorite subject, Ron.
So where do they find us, Anita?
Yes, so thank you for watching yet another episode on MH Consultants on YouTube. And for more updates, please follow us on Instagram at mhconsultants_ph. Thank you so much. And thank you, Ron, for all this wonderful inputs. I think we've given our subscriber um, enough options to consider where he can put his salaried income, and
So we answered what the subscriber.
yes,
In fact, I will ask the subscriber and see what he or she. It's actually he. What he says.
yes, yeah, we should.
We will. Any other feedback? We'd be very happy to
Yes,
respond to.
absolutely. Anything in investment, any particular topic, do shoot us a direct message on Instagram or send us a WhatsApp message or reach us out in some way that you can on LinkedIn. And we will be sure to include that in our next podcast.
Thank you very much.
Thank you.
Thank you.